Susie, questions on Christmas dinner. Would you go for Yorkshire puddings?
Absolutely not.
Bread sauce with milk, obviously.
Yes. Yeah, no, definitely. There's a lot to be said for bread sauce.
Cauliflower cheese.
Yes.
What else? Red cabbage.
Yes.
Beef or turkey or fish?
Not fish. We'd generally go for turkey, but with a side of gammon.
Oh, good choice. Welcome to Agronomics, your weekly dip into the economics of agriculture. And if you know your numbers, you'll know there's a new episode every 7 days. That's 1 week. I'm your host, David Judel, and in this offering, it's all about the white stuff and its record-breaking efforts in the markets of late. Joining me is AHDB's Lead Analyst for Dairy, Susie Stannard, to take us on a tour of the sector and help us understand what is happening in the world of milk. With prices so high, what does it mean for farmgate and production in general? Plus, we'll have the most up-to-date market report from one of the sectors sandwiched in the middle, which is why you should never be put off by the main topic of conversation because it's not your sector, as there's always some nuggets of information for all levy payers. Please follow or subscribe to this podcast to make sure you don't miss an episode, and make sure you help us spread the word, as our work is intended to help the whole of the industry make informed choices. New shows drop every Wednesday at midday, and please get in touch. Comment on any of AHDB's social channels or email us agronomics@ahdb.org.uk. So what have we been up to over the last few weeks at AHDB? We've been engaging with levy payers a lot. This is a time of year to get out and about and see farmers and processors at events and conferences, and we've definitely been out doing that, but we've also been releasing some fantastic pieces of work. You may have seen the 2030 work on beef and lamb. Go and check out the episode on that. Most recently, we were talking to Vanessa and Awal about halal and the importance of the halal sector in beef and lamb as well. So lots of good stuff, and we're here to talk about dairy this week. But before we do, we've had a lot of spam in the Agronomics inbox recently, and not just from my former co-host Jack. Some bloke called Luke's been wishing us a warm and joyful Thanksgiving, so thank you, Luke, whoever you are. Is Luke real or is he AI? Who knows? While another email wanted us to get up to speed with the Restaurant and Bar Hong Kong 2024 event. I'd say we should go, but it took place in September, so I think we've already missed it. And we've got another mystery music act for you to identify in this episode. I'm not sure if producer Martin has pulled off a blinder or if he's just kind of screwed Susie and I over. We'll let you be the judge of that by the end of the show. So, Susie, let's talk about dairy. Let's talk about milk. We've seen some record-breaking prices across the commodity level markets over the last couple of months. And we probably should have spoken about this sooner because it's been a really interesting time. So I guess the real question is, what is going on with prices for dairy products and why?
Yeah, so we've seen a really strong uplift in prices this year. So sort of coming through the year, which has really been driven by a bit of a shortage of milk supplies, really, which we've seen through a lot of the early part of the year, and particularly fats, which has really driven the prices for fats. Bulk cream has been at record-breaking levels, and also butter. So butter has been up almost as high as £7,000 a tonne. Back in September, we dropped off a little bit in October, but rebounded again in November. So butter at the moment sitting at £6.30, and that's been so high because we've not really been making much butter for most of the year because bulk cream's been at such a high price, and traders have really been struggling to cover their short-term needs. So even though butter's been back a little bit in retail, the overall commodity prices have just been astonishingly high, which has been great news for farmers because a lot of that has started to feed through into farm gate prices. One of the interesting things is there's been a bit of a divergence between fats, which is, if you look at the value of milk, you can break it down into two areas. One area is fats and the other area is proteins. And generally, if you look back over a long period, the value of fats and proteins pretty equal. But we've seen a big divergence happening. So a lot of the value of milk now is being driven by fats and actually protein. So we can make skim milk powder and whey and cheese as well from protein, but particularly skim milk powder. And skim milk powder has not done anything all year while the value of fat's been soaring. So a bit of a sign of the times at the moment.
So this isn't something that's just a load of demand of people nipping down the supermarket to buy a load of cream before Christmas, is it, Susie? This is something that's been happening on a global scale, which is actually, again, really interesting from a commodity market level point of view, and again shows the importance of how those global markets filter through down to farmgate prices. And dairy is definitely one of those sectors where that global market affects everything that's happening on farm in the UK.
Yeah, and I think the growth in prices can be looked at in two ways. So you can get a growth either coming from a growth in demand or from a shortage, so a contraction in supply. And I think this spike that we're seeing is primarily supply driven, although the demand's been good in some areas but not great in other areas. So I think a lot of it has been coming from a bit of a shortage, and particularly in recent months in Europe, we've seen a bit of a shortage coming from certain markets. So Ireland, for example, where we tend to get a lot of our things like butter and cheese because they have a surplus and their export focus. Irish milk supplies have been back quite considerably for the past couple of years. So that's played a role. And then also in the last sort of 6 months or so, if we look at the Netherlands and Germany and Ireland, and Italy, those are markets that have also been back in terms of their production, and that's been because they've been impacted by blue tongue virus. So even though blue tongue virus is quite a nasty disease, particularly in sheep, and it can often be, generally be fatal in sheep, it doesn't have the same effect on cows. It's still a nasty disease, but it doesn't tend to kill them. But what it will do is constrain supply. So an impacted cow will not produce as much milk. And there are other impacts in terms of fertility and things like that are all playing a role. But because of that, in the round, supply has been back a bit. In demand terms, that's been interesting. So one of the big markets that has driven dairy demand in recent years has been China, which has played a massive role. But we've seen in the past couple of years, Chinese demand has been back quite a bit. And that's been a result of Chinese domestic milk supplies growing quite strongly. So the Chinese government have really had a policy goal of growing self-sufficiency in dairy, which they've probably been too successful at doing, in fact, which has meant that they've been oversupplied. So a lot of Chinese demand for commodities like powders, like skim milk powder, for example, has been in decline. Demand for things like baby milk powder has also been in decline, and that's been a bit of a result of a low birth rate in China as well. So all of those factors has meant that Chinese demand has been lower than we would typically expect, particularly on that protein side, but actually Chinese demand for fats has still been there. So that's almost distorted the market to some extent as well, because there's been more demand for fat and less demand for protein.
That's an odd balance of the market in terms of how it's been. How has that impacted through to farmgate prices domestically? And are we expecting them to, I suppose, follow the pattern that we've seen recently, that there's a firmness in the wholesale market, and should we be looking at a firmer farmgate price as well?
Yeah, definitely. What we tend to do is, by looking at the commodity values, we can derive a couple of metrics that we look at, one of which is AMPI, which is the actual milk price equivalent, which you get by looking at the value of butter and the value of skim. You look at the manufacturing costs, take those off, and then what you're left with is this metric, which we call AMPI. And we do a similar one for cheese, which is called McV. By looking at those two different metrics, combining them together, weighted towards the value of cheese, because we produce more of that in this country, we get this metric called the MMV. Now, that's an interesting metric because if we plot it over time, it correlates very closely to the average milk price, which we have in GB, with a bit of a lag. So we have a 3-month lag, so we can plot the MMV, look at the average milk price, and so it can be predictive. So we can see in 3 months' time where the milk price is likely to be. And at the moment, it's looking like the milk price is going to sit at For January, it should be sitting around 46 pence per litre. Our latest average milk price for September, this data comes from DEFRA, is at 41.4 pence per litre. So even though it looks like the commodity markets are probably topped out a bit now, we're still looking at farmgate prices coming up for the next few months, which is great. And because of that shortage in supply, there's also quite a low availability of dairy products. We've sort of used up on some of our supplies of butter and cheese and other products. So because of that, we're not expecting commodity values to come down very quickly, which is great news for farmers certainly for dairy farmers, because it looks as though the milk price was going to be at a pretty good level for quite a while.
And I think that's positive news, especially in the general view of input costs as well, because input costs and that supply chain inflation that we've seen over recent years is still strong. So farmers are still operating in a higher cost basis. And this is very much a matter of, it isn't just about trying to force a profit. This is about trying to create a functioning level of farming, isn't it? Around creating a price of milk where farmers actually are able to produce, keep a margin within it, and essentially not make a loss. And because of those inflationary aspects that we've seen, the dairy industry has definitely been one of those areas that's been squeezed because of higher energy prices. So it's good to see, I think, that farmgate prices are going to be firm over the short term.
And, it's what farm businesses need in order to be able to plan ahead and make investments. They need that price to be there. Unfortunately, the dairy market tends to be quite cyclical. It operates very much on a commodity cycle, and dairy, not uniquely, but dairy, I think, is particularly exposed to what's happening in the global market. So we can never quite say that, that price will be assured, because it probably won't. It will probably drift off again. But what's better this time round than perhaps at the end of 2022 was that input costs were incredibly high at that point. So although they are higher than they were and we have got a higher cost base, there is a bit more room for margin, and particularly feed costs at the moment are looking pretty good. So if we look at the milk to feed price ratio, that's firmly sitting in the expansion zone at the moment. So all of that is kind of quite positive for farmers, but it is signalling to them to make more milk. And we know that can be problematic, because make more milk, you've made too much milk, and then that will force the prices down again. So, that's something that we kind of need to keep a watch out for, I think.
We're forever in the balance of supply and demand. That's what we like from an agronomics perspective. Right, we're going to take a short break now to get the latest in the markets, and when we come back, we're going to be talking more about dairy, focusing on what it means for milk production, as well as the domestic and international demand side.
Hi, I'm Olivia Bonser, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 6th of January. Despite some support in wheat markets over the Christmas period, prices have been under pressure in the new year from a strengthening US dollar, technical selling and sluggish global demand. However, Russian wheat crop conditions remain in focus, with warmer than usual temperatures and excess moisture in key growing regions. Persistent hot and dry weather in Argentina is also raising concern over the country's maize crop, which is now in its critical development stage. For rapeseed, new crop prices are supported, with doubts over prospects for global rapeseed production in 2025, though forecasts of heavy soybean supplies from South America limit any major price increases. Over the next few weeks, weather in major exporting countries such as South America and Russia will be key in driving prices. The USDA will also release updated global supply and demand estimates at the end of this week. To stay up to date with the latest data and analysis across arable, red meat and dairy markets, head to hdb.org.uk and click on Markets and Prices.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episode you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
So welcome back to Agonomics. This week we're talking about dairy and milk with Susie Stannard, our lead analyst for the dairy sector. And before that break, we were talking about how we've seen a strong period of commodity prices, wholesale prices, prices of fats being very strong in the dairy sector, which is leading to a support for the milk price. But because we've got some positivity for the sector in terms of lower feed costs, that's actually leading to an incentive to produce more milk. And obviously, when we produce more milk, we get into that cyclical pattern of more supply and then for prices being impacted. But I suppose the key question, Susie, is in terms of the forecast for the milk production and where we go from here, because that speed of market reaction, and agricultural markets are brilliantly reactive and very kind of common sensed in that way. If you put a price trigger in front of people, they will follow it. How quickly is that going to follow through to actual changes in milk production?
Well, I think we've already been seeing that uplift in milk production. So for the majority of the calendar year, so really through to about August, we were, back a little bit. So back by, less than 1% in most cases, but still back. What we're seeing now as we head through the autumn, so September tipped into growth, so up by 0.9% year on year for GB. October accelerated a bit, so October went up to plus 2.5%. November, although we've only got half of November's data through as yet, November was up by 4.9% in the month to date, so that's pretty stellar growth. And the milk prices definitely played a role. But the other factor that did actually play quite a big role and tend to in dairy is the weather. So we had quite a mild, quite a dry autumn. And in actual fact, a lot of farmers didn't even bring their cows in till a couple of weeks ago when we got that massive snow weather bomb. But up until that point, it was pretty mild. The grass was still growing, which is positive because it means that you save some labour, you don't have to start dipping into your winter forage supplies, and the cow's pretty happy, so they're producing. So that plus milk prices being high was a bit of a perfect storm, really, which was in marked contrast to the autumn we had last year, where it was just consistent rain that didn't, started in about October time and then didn't stop till about the 1st of May, I think.
It did rain a lot. I don't think we've quite got over that amount of rain yet. I still think we're struggling to cope with it. Anytime the clouds come over, I think people start to panic at the moment.
Absolutely, it's PTSD, isn't it? Like, oh my God, it's raining. Yeah, it will rain. It's the UK, but yeah, we'd like quite a balance between rain and dry, please.
I thought at this time of year it was supposed to come all frosty and like winter wonderland, wasn't it? That's what the Christmas cards tell me. You're saying that's not going to happen?
Well, supposedly, but I was walking around just in, with no coat on, not even a big coat, no coat at all at the weekend because it was quite mild, so that's not normal.
Make the most of it when it's there.
Yeah, and then hopefully towards Christmas we'll get a bit more seasonal frostiness.
Exactly. I'm not going to start singing. I'm dreaming of a white Christmas. Anyway, back to other white things, back to milk. I suppose what's the longer term view? I suppose as we're heading sort of longer into 2025, do we see a sort of a pattern changing in the production cycle?
I think our expectations at the moment are for this trend towards increased production to continue, certainly through until the flush. The spring flush is when we start to see, milk supplies really, really surging ahead. And I think we're expecting year-on-year growth, particularly because last year was such a poor year because of that awful weather that we've been talking about. And that really held most of last year back. So provided we don't have terrible weather again, we'll be annualising against a period with crap weather, which should mean that without the influence of price increases, that things should be ahead anyway. And with decent prices, we're expecting things to stay ahead. The question is how long that continues for. And that's difficult to forecast ahead. We can't forecast ahead what's going to happen with prices necessarily. However, because this year in the autumn's been so strong, I think things will start to drop off a bit because we can't continue that growth. So if you sort of take all those factors in mind, we have to really balance a couple of sets of factors. So one of which is, better weather, high milk prices. And the other side is the kind of more structural difficulties that we might see. And so you get a bit of a kung fu fight between the positive factors of those higher milk prices and better weather and some of those structural headwinds. You know, we're talking about things like tax implications of inheritance tax, environmental regulations, poor forage quality, which is a hangover from the bad weather from this year. And, you know, we have to weigh up those two sets of factors to see what we think is going to happen. So overall, we think the milk year for this year, so the 2024 to 25 season, should end up about 1% in growth, and then looking pretty similar for the following year. But we'll probably start to see a bit of decline coming in the autumn next year.
And I suppose, you know, to be the best economist we can be, we've spoken about supply there a lot. And obviously the market is incentivising supply at the moment, but that doesn't necessarily have to mean massive oversupply and huge surplus and dropping prices, because we haven't really spoken about the demand side either. And obviously if we get a strong demand side, then that can help to drink up and soak up a lot of that extra production that we're seeing. So what does it look like on the demand side? Is there a balancing factor coming in?
Yeah, probably, because the problem with demand is, you know, with those higher prices at farmgate levels, those will filter through into consumer prices. You know, it's not always completely linked in dairy, as we know. You know, milk, for example, is a classic loss leader product that is put out to bring people into, you know, at a cheap price, to bring people in and attract people to different supermarkets. So we know that. However, you know, we've already seen the impact of those soaring butter prices coming through to the price of butter in retail, and that is already having an impact. So if we look at supermarket sales of butter in the last 12 months, they've been declining in value terms by 4.5% and in volume terms by 3.5%. And that's really, you know, consumers love a bit of butter, as we know. A bit of butter on your crumpet, they love it. But, you know, when there's cheaper plant-based alternatives, you know, margarines, etc., you know, we're seeing quite a bit of switching in that direction and people just tending to use a bit less product. So that will be the key factor in demand terms, is how well it sort of performs. Because if that demand drops significantly, then we could have a problem. However, generally, demand for retail's not looking too bad. It's back a little bit at an overall level. A lot of that's been driven, though. So it's back by 0.6% in volume terms, but a lot of that was driven by milk. So milk is back by minus 1.8%. However, there are pockets of growth. So if we look at Channel Island milk, for example, which is quite a premium product, you know, all those gold top milks which your parents might have had or your grandparents, it's actually finding new audiences and is up by 18.9% year on year, which is pretty sterling. Cheese is also doing really well. So cheese up by 3.8%. Cheese, obviously a Christmas favourite. You know, what would Christmas be without a lovely big cheese board? Cream, another festive favourite. And again, cream's performing really well at the moment, 2.5%. And the other strong performer, which is not so much of a Christmas favourite, it's more for one in the January when you're starting to like watch your weight again, is yoghurt. But yoghurt's been doing really well this year. So yoghurt's up by 6.5%. And that is because that as consumers start to feel a little bit better off, as some of the pay rises and things like that come through, they start to think about their health again, and health becomes a bigger driver. And actually that's doing good things for the growth of yoghurt.
And it's an interesting one. I mean, we sort of slightly flippantly mentioning about the weather and people remembering the clouds and the rain, but it's similar from consumers' point of view in terms of purchasing, that, you know, we had that cost of living crisis and the higher prices, and I suppose there's still a lingering fear of food price inflation. People are still, from a consumer level, very driven by price and making those price-based decisions. So it isn't surprising to see things like butter, you know, struggling a little bit because of the strong prices that we've seen. Right. Susie, thank you. That was a fantastic run around all of the dairy markets. We've got everything covered there that we need. And more importantly, you professionally managed to get in the song of the day, the single song of the day, which was Kung Fu Fighting by Carl Douglas, who is 82 years old. And that song was released in 1974.
That's incredible.
One of our favourite songs. And just like Kung Fu Fighting, we'll be as fast as lightning in disappearing off into our economics world, and we'll see you again another week for more agonomics.